Picture this. You're looking at a company that was officially incorporated just 3 years ago, yet the unofficial gray market is already pricing in a massive 22% premium before a single share even hits the stock exchange. It's exactly the kind of aggressive expected return that immediately turns heads and gets the market buzzing. But you have to ask yourself, is this enthusiasm actually justified by the company's fundamentals, or is it just the byproduct of a highly speculative environment? Well, that is exactly the puzzle we're going to piece together right now.
Welcome to today's Explainer. I am absolutely thrilled you're tuning in, because we are breaking down one of the most highly anticipated SME IPOs on the radar right now, Anawil Wire and Engineering Limited. As always, our goal is to cut straight through the noise. We're looking strictly at the data, the official draft red herring prospectus, and current market metrics to build a clear, objective breakdown. So whether you're actively considering participating or you're just fascinated by the mechanics of the primary market, you are definitely in the right place.
Okay, let's dive right into this. Here's our roadmap for today. We're going to cover who Anawil actually is, how their wind energy business operates, the IPO by the numbers, what's going on with that gray market premium, and finally, the crucial deadlines and risks.
All right, part 1. Let's officially meet Anawil Wire and Engineering.
So as a corporate entity, Anawil was officially born in January 2021. Now, in the world of heavy engineering and infrastructure, 2021? That is literally just yesterday. So naturally, as cautious investors, a red flag goes up. You've kind of got to wonder, how does a company barely 3 years old handle the massive scale required for wind energy infrastructure?
Well, here's the interesting part. While the corporate entity itself was born in 2021, the human capital running the show is far from novice. The core team brings over 20 years of hardcore, specialized experience in heavy fabrication, blasting, and painting. And they've actually got the receipts to prove it. They are recognized as India's first manufacturer to successfully produce 100 windmill towers. That is a massive milestone. It proves they have the technical chops and the execution capabilities to deliver at a high level. They aren't starting from scratch, they're scaling up an already established baseline of expertise.
Moving on to part 2, their actual wind energy business.
Anawil specializes in windmill towers, turbine tubular towers, and advanced engineering components. And let me tell you, they don't do this out of some tiny workshop. They operate 2 highly modern manufacturing facilities strategically located in Koppal, Karnataka, and Kutch, Gujarat. These places are fully loaded with top-tier fabrication, welding, testing, and quality control infrastructure. We are talking about heavy, highly complex industrial work here, and these facilities are custom-built to hit the rigorous quality standards that the wind energy sector absolutely demands. So, the absolutely crucial point to remember is this number right here, 612. That's their total annual production capacity for these huge windmill towers. To put that in perspective, a single tower is a multi-ton, gigantic feat of engineering. So cranking out 612 of them a year? That is highly aggressive. It tells us they are built for serious volume, positioning themselves as a major supply chain player in India's rapidly expanding renewable energy push. Okay, let's get into the math. Part 3, the IPO by the numbers. Here's exactly how the deal is structured. The total issue size sits at roughly 177.81 crores. But as diligent observers, we know we can't just take that at face value. We have to break it down. The lion's share of this, about 142.69 crores, is a fresh issue. This is fantastic news because it means fresh capital is flowing straight into the company to be used for working capital and growth. The rest is an offer for sale, or OFS, consisting of just over 1.3 million shares being sold by the promoter, Nimish Kumar Ramachandra Vashin. So it's a hybrid issue, but it's heavily weighted toward fresh capital, which is generally a really positive signal for their future operations.
Now, if you're looking to participate, here are the vital mechanics you need to know. The price band is set between 257 and 270 rupees per share. But since this is an SME IPO listing on the NSE Emerge platform, retail investors can't just buy a handful of shares. The minimum lot size is locked in at 800 shares. This means if you're bidding at that upper end of 270 rupees, your minimum investment commitment for a single lot is going to be 216,000 rupees. It's a chunky ticket size for sure, but that's pretty standard for the SME board, designed to ensure a specific caliber of serious investor participation.
And steering this whole process are 2 notable institutional partners. Heem Securities is stepping up as the book-running lead manager. It's definitely worth noting their track record. They've handled 79 issues in just the past 3 years. Alongside them, Big Share Services is acting as the registrar, handling the actual allotment process. Knowing who is in the driver's seat really helps give us context on how the deal is structured and how reliable the execution is going to be.
All right, on to part 4, and this is the juicy stuff, the gray market premium explained. Now, what's genuinely fascinating here is the sheer velocity of the gray market movement. As of July 30th, the gray market premium, the GMP, for Anawil was sitting at 60 rupees. But get this, literally one day prior, on July 29th, the GMP was at 35 rupees. It nearly doubled in unofficial market demand in just 24 hours. That kind of jump in the Kostak rates, which is the premium paid for the IPO application itself, is signaling some incredibly intense pre-listing hype.
So what does that mean for you? Well, if you take that 60 rupee premium and slap it on top of the 270 rupee upper price band, you are looking at an expected listing gain of 22.22%. It's a super flashy, highly attractive number. But, and this is absolutely crucial, you have to remember this is based entirely on unregulated gray market trends. The GMP is totally speculative. It can swing wildly based on broader market conditions, and it is in no way a guarantee of actual listing day performance. Treat it as a thermometer for sentiment, not a crystal ball for profit. Let's move to our final section, Part 5, Important Deadlines and Risks, and see how this all builds out.
First up, the calendar. If you're tracking this, you absolutely need these strict deadlines. The IPO opens on August 3rd and has a very tight window, slamming shut just 2 days later on August 5th. The basis of allotment gets finalized by August 6th, and shares are expected to officially list on the NSE SME board by August 10th. The turnaround time on SME IPOs is incredibly fast, so preparation is key.
Now, as an objective explainer, we'll always have to contrast the market hype against the official risk factors. On one side, we have this aggressive growth narrative, amazing modern infrastructure pumping out 612 massive windmill towers a year. But on the flip side, we have the stark reality pulled straight from their own draft red herring prospectus. The heavy fabrication and wind energy sector is notoriously seasonal. From April to September, the monsoon season hits hard, bringing severe weather and massive logistical constraints. Honestly, you simply cannot transport 100-meter steel towers effectively in torrential rains. This bottlenecks their project execution, which significantly drags down demand, revenues, and profitability for half the year. It's a highly cyclical business, and that seasonality is a very real risk factor you have to weigh against that 612 tower capacity. We've unpacked a ton of data today, but true due diligence shouldn't stop here. I highly encourage you to go straight to the primary source material. You can easily pull up the official 350-plus page draft red herring prospectus for Anawil Wire and Engineering. Take a little time to read the full risk factors, dig deeper into those financials, and really understand the nuts and bolts of what you are analyzing.
And that brings us to the ultimate question that you have to answer for yourself. You've seen the impressive 20-year pedigree, the massive production scale, and that thrilling 22% gray market premium. But you've also seen the grounded reality of a business highly vulnerable to half a year of monsoon logistical disruptions. So, does the potential reward outweigh the operational realities? Take the facts we've laid out today, weigh them up carefully, and decide for yourself. Thanks so much for joining me on this deep dive in today's Explainer, and keep